Hey, what's up guys? Welcome back to the channel. In this video, I want to explain to you guys why 90% of my portfolio is concentrated around clean energy stocks and why I think they could be the best investment opportunity in this market crash. I know that as a growth investor, it's very hard to find the light at the end of the tunnel when your stocks are consistently going down every single week. But in this video, I want to reassure you that if you're owning clean energy, hydrogen, and EV stocks, and if you're buying the right companies, you will have a very big wealth creation opportunity this decade. But as usual, before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing I want to address is why exactly the current oil crisis is setting a big runway for clean energy investments. Now, yes, in the short term, we're going to see excess supply of oil refineries and fracking come online. But in the longer term, over the next 3 to 5 years, we are going to see a transition to renewable energy. And this is not only going to translate on the consumer demand side through adoption of EVs, but this massive transition is also going to play out on the back end on the infrastructure side. But I'm sure the question you guys are asking is, why am I concentrating so heavily on just one sector? Well, the simple reason for that is the safest way to build a lot of life-changing wealth in the next decade. And that is the precise strategy that somebody like Warren Buffett has applied through his wealth creation journey over the last 100 years. I know he says diversification is very important, but it's only important if you don't know what you're doing, and that is precisely where index funds and ETFs come into play. But if you're in a very early stage of your life and you want to build serious wealth, you have to focus on a specific sector where you have an edge or an advantage over your competition. Because if you're basing your investment decisions off the same data that somebody else has, then you don't have an edge, and chances are you're not going to make any insane amount of money. Instead, you have to have an edge, and that is why I'm investing in clean energy, because I worked in that industry for a very long amount of time. So the bottom line is that the key is to concentrate on specific sectors, not necessarily gamble all your wealth on one stock. And that is significantly going to reduce your risk while making sure that you're able to capitalize on a very rapidly growing market. You guys already know the first few stocks that I own are Nikola Motors and Plug Power. But in this video, I want to give you guys an introduction to my other 3 to 4 stocks I own in this sector. The first one being STEM. Now, this company is a massive innovator in the energy storage segment. For those that don't know, if you use solar or wind panels, you need to be able to pair them with a battery system so that you can match supply and demand. Otherwise, you can't really use that solar panel effectively. And that is precisely the industry that STEM operates in. Now, STEM as a stock has gotten absolutely destroyed over the past year or so. Stock hit highs of almost $51. Now it's trading at $6.50. But the good thing is that throughout this entire mania, the fundamentals of this company have stayed strong. This company acquired another business called Also Energy, which is an entire software business in the business analytics space. And because of that, their gross margins could be north of 30% by the end of 2023. Now, obviously, right now, as you can see, the gross margins are at 3% and they are not profitable. And that is a simple reason why the stock has performed poorly. But again, as an investor, my time horizon is not the next 12 months, it's the next 3 years or more. And in that time frame, this stock can really turn around, because from a valuation perspective, this company is trading at a forward price of sales of only $3, because this year, this company is expected to more than double their top line revenue of $153 million last quarter. And as you can see, their market cap is just shy of $1 billion, which is ridiculously cheap for a company that's growing revenues by 271%. And like I said, the most important part is that STEM not only sells battery storage units to its customers at around a 30% gross margin, but they also sell an artificial intelligence software, which is sitting at an 80% gross margin. So if this company is continuing to able to grow their revenue over the next couple of years at this current rate, the market is going to realize that growth is really only going to be found in the clean energy sector. The next stock up here we have is ticker symbol BE or Bloom Energy, which as you can see right off the bat is trading at a very cheap valuation of only $3 of a price of sales, and as you also might be able to notice, is getting to profitability within the next 18 months. And this is precisely why this stock could be a massive turnaround play. You see, it's very rare to find not only positive free cash flow, but even net income profitability in the clean energy segment, because obviously this entire industry is highly dependent on capex. But Bloom has been in this business for over 20 years. This company is currently led by its founder, which is a big tailwind for this company. And we all know that institutions love switching their mantra around a company when it gets close to profitability. And that is when price target upgrades start to come in, and that's when funds start to flow into the stock, just like we saw in 2020 with Tesla. And the difference with Bloom as compared to a company like Plug is that these guys only sell one technology that is used for stationary power. This fuel cell system they use right here essentially allows companies like Walmart, institutions, any commercial business to be able to power their entire operations solely using natural gas that is generated on site, meaning that this server essentially right here is a replacement for the electricity bill that those companies face. And that is precisely why Bloom Energy is going to be a key player in the transition to renewable energy. But it's not just revenue that is leading the charge for a company like Bloom Energy. It's also the fact that their inner technology is significantly more inventive and innovative than its competitors. These guys literally won the Global Pats Energy Award in 2021 because their electrolyzer technology by far is the most efficient technology on the entire planet comparing to every single other electrolyzer made by all these other companies across the globe. And so as oil prices rise and people and companies become more aware of the requirement for more durability and resiliency from the very fragile electric grid, companies are going to turn to a supplier like Bloom Energy to provide them better and more resilient power for their businesses. And the technology and the innovation is only the cherry on top of the cake, alongside obviously the valuation for the stock, which is very cheap compared to its competitors. As you can see, the only problem with this company is that right now they have a little bit more debt than they have cash on the balance sheet. But the important aspect here is that because of their free cash flow, these guys will ramp up the demand for their equity. And because of that, these guys will be able to raise money potentially through bonds and convertible notes a lot easier than a company like, let's say, STEM, which is in such an early stage that even has a lot of cash and maybe minimal debt. But regardless, these guys are expected to accelerate revenue growth in 2023 at 31%, which would definitely make the current valuation of Bloom Energy extremely attractive. But that's not where the story ends. The third clean energy stock that I've been buying aggressively, although very risky, is ticker symbol ADN. Now, this is a startup company that is essentially trying to commercialize a lab technology where they're able to significantly increase the lifespan, efficiency, and practicality of fuel cells and trying to bring that technology to the market. You see, fuel cells use a technology called an MEA, or a membrane electrode assembly, to really function. And Advent has their own patent for why the efficiency of their MEA is significantly higher than the competitors. And so this company is significantly different from Plug or Bloom Energy in the sense that they make their technology in-house, which means their vertical integration opportunities and margin compression opportunities are significantly high in the long term, if obviously these guys are able to execute on their business plan. And because of that, a company like Hyundai recently signed a technology assessment agreement with this exact company because they see the value that this technology could provide to their fuel cell trucks and their fuel cell systems. And as you can see, this joint venture is only expected to accelerate because this is simply the technology assessment. And with this year's revenue at around $21 million expected, this price of sales is going to be cut in half to around $4 or $5, which is pretty cheap for a company that's expected to grow in the multi-hundred digits for at least the next 3 to 4 years in terms of revenue. And the best part is that these guys are expected to realize revenue from fuel cell systems and MEA sales not only in the power generation sector, but also in the fuel cell automotive, the oil and gas, and the defense sector. So in terms of industry diversification, there is a massive opportunity in this company. But anyways, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what stocks you guys are buying and why you're buying them. But anyways, guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.